Welcome back to another video. Soil here, and today we're going to talk about TRIX, which is a momentum oscillator built based on a triple exponentially smoothed moving average. If you're interested to learn this excellent indicator, stay tuned and let's get started. Alright, here we go. We got TRIX indicator below the chart, and as you can see, it's oscillating above and below the center line, which is 0 in this indicator. TRIX shows the percentage rate of change for a triple exponentially smoothed moving average. You may think, what is a triple exponentially smoothed moving average? It's simply EMA of an EMA of an EMA, and then TRIX is the percentage rate of change in that period for the triple smoothed EMA. I don't intend to get into the calculations in this video, and in practice you don't need it, and you just need to learn how to interpret it. So if you're curious on how it's exactly calculated, or you want to develop an algorithm based on this indicator and you need the exact formulas for calculations of this indicator, just simply search in the Google and you'll find it in many websites. The default setting for the length of this indicator is 18, but you can change it based on your trading style, trading system, or the market you're trading, so it will better match with your whole analytical process. Alright, now let's see how we interpret this indicator and how we can use it for trading. You must always pay attention to the center line. When the TRIX is positive, it means that the triple smoothed moving average is rising, and this shows that the bulls have the control and the upside momentum is greater than the downside momentum. And similarly, when the TRIX is negative, it means that the triple smoothed moving average is falling, and this shows that the bears have the control and the downside momentum is greater than the upside momentum. So as long as that the TRIX is above 0, it shows that the buying pressure is higher than the selling pressure, and as long as it's below 0, it shows that the selling pressure is higher than the buying pressure. So the center line crossover actually shows the change and shift between forces of buyers and sellers, and this can provide a buying or selling signal. When the TRIX line crosses above the center line, it's a buy signal, and when it crosses below the center line, it's a sell signal. But please pay attention that these signals based on center line crossovers are a little bit late, and they are more useful for confirming the advancing of the price or declining of the price by evaluating the momentum and measuring the buying and selling pressures, so that we can find out which one outweighs the other one. Another signal that we can get from this indicator is divergence, and it's when the TRIX doesn't move in the direction of the price. A bullish divergence forms when the price is making lower low, but the TRIX is making higher low, like what you see here on this chart. The price made lower low, but the TRIX made higher low. This higher low indicates less downside momentum and increasing upside momentum, and this shows possibility of bullish reversal. And as you can see, after that the price changed its direction and turned to an uptrend, but the divergence doesn't necessarily mean that a reversal happens, and after the divergence the price may go to a trading range like what you see here on this chart, and after that the price may continue its prior direction or a reversal may happen. So when a divergence forms on the chart, it generally means that the current trend is weakening. But please pay attention that when the trend is strong, a divergence may form, but the trend continues its direction, or even you may see some consecutive divergences before any happening of reversal or weakening of the current trend, and in these cases they just foreshadow corrections or pullbacks. And a bearish divergence forms when the price is making higher high but the TRIX is making lower high, like here on this chart. The price made higher high but the TRIX made lower high. This lower high indicates less upside momentum and increasing downside momentum, and this shows the possibility of weakening of the current trend and possibly a bearish reversal like what happened here on this chart. But similar to bullish divergences, when the trend is strong we can have a bearish divergence, but after that the price continues advancing, or even we may have some consecutive divergences before having any reversal or ending of the overall trend, and in these cases they just foreshadow corrections or pullbacks. TRIX is an effective indicator indicator for evaluating momentum and identifying possible reversals and starting of new trends, but like any other tools in technical analysis, you shouldn't make your trading decisions only based on this indicator, and you must use it in conjunction with other tools and concepts of technical analysis. Alright, that's it. Thank you for watching this video. If you have any questions, feel free to ask and leave a comment for me. I'll answer your questions as soon as possible. If you found any value in this video, please like it, please subscribe to my channel if you haven't already, and hit the bell so you get the notifications of my new videos. See you guys in next video, and good luck with your trading.